SaaS Insiders, I am genuinely happy that you're listening to this episode right now and you're not missing out because this one is gold. I'm your host Vlad Hu, and today I'm interviewing Ayham Ereksousi. He's a founder of Stomio, and today we're going to be talking a lot about his mission, vision, how he manages the company. But what's important as well is his really deep experience with fundraising and some of the wisdom that he's sharing on this session that will definitely level up your game, or at least give you some inspiration on how to approach fundraising for your SaaS business. Just listen to this short 20-second episode to give a bite-sized taste on what we're talking about.
Yeah, and fundraising is actually a kind of like a momentum sport, if you think about it. Like even if you pitch to somebody in your network and let's say if you're raising $500,000 and you're able to close 100K from them, you can go to the next investor and now your pitch is different. At the end of the pitch, it's like, hey, we're raising for 500K. We already closed 100K, by the way. And so that they said, okay, well, I'm not the first check and somebody else believes in this team. Okay, let me write 50K or 25K. And then the next one is going to be easier. The next one's going to be easier. And guess what? When you get 400K, you're just looking to close that last 100K in the round. It becomes easier and easier.
Now, and that's only 20 seconds. Imagine like how much value we have in today's half an hour conversation. So if you're preparing for the gym, for the ride, somewhere in your car or anywhere else where you have 15 to 20 minutes of your time, of your mental bandwidth to listen and get value, this is the right episode. Let's get to the full session. This episode is sponsored by the SaaS Insiders Studio. We help SaaS founders build their minimum viable products, MVPs, launch quickly, find a product market fit, and grow from there. SaaS Insiders Studio works with non-technical founders that are on the pre-seed or seed stage to help them execute on their product vision. To learn more, go to my LinkedIn profile that you can find in the description to this episode and shoot me a direct message there. All right, let's jump straight into today's episode. SaaS Insiders, I welcome you to this episode of our show. Today, I'm joined by Ayham Ereksousi, and today we're going to talk about his company, his journey, how he got started, when is the right time to get funded, and all of the interesting jazz that he's been through, and just a nice conversation with a fellow SaaS founder. With that said, Ayham, I welcome you to the show.
Oh, thanks, Vlad. Thanks for having me.
For those who might not know you yet, if you could give maybe 60 to 100-second introduction of who you are, what you're working on, where you're coming from.
Yeah, absolutely. So my name is Ayham, co-founder, CEO of an early stage startup called Stomio. Check us out, stomio.io. We are a platform for B2B product teams to help capture voice of customer at scale during product development. So normally in the B2B environment, you have slightly longer development cycles and you need to incorporate your voice of customer throughout the process. Most of companies have what they call a beta test phase or a private preview phase. It depends on the business that incorporates a large amount of their customers to get their feedback and test it in real life. That process, from my past experience, is chaotic. And through Stomio, we help manage it and give the product team the tool to really focus on what matters, which is engage with their customers and analyze the feedback. And we take the mundane out of that process, make it very automated and very fun for everybody. We're early stage, so we're pre-seed going to seed. We launched August last year. We have early stages of, I would say, momentum and traction and monetization. And we're about to launch our seed round soon. So it's been an exciting journey.
One question I wanted to ask, and the reason I'm asking is because SaaS Insiders collaborate often. Sometimes they try each other's products. For your product, for Stomio, is it for the beta testing, like for the MVPs? What kind of stage of the product company is perfect to use your software?
Great question. Yeah. So if you think about the size of the company, right? Usually in any company lifecycle, you have various stages and various requirements. I would classify super early stage companies like us. You probably need to move much faster than having a very well, established process and beta testing cycle. So you just want to get something out, get a couple of feedback points, iterate if it makes sense, and keep going until you get some traction. So I would say like early stage is you're better off just talking to people one-on-one. It's much faster feedback loop, and they will give you some feedback. And then you start to scale the company. So you start to the early stage growth, right? So you get to, I would say, between 20 to 100 employees at the company. You're still moving really fast. You still have some chaos in the process and whatnot. You probably have a big initiative in beta, but you're probably not thinking about how to establish infrastructure, how to capture voice of customer at scale. So that's the start of what we can help, I would say, when you start to get to that 100 employee mark. And then from there on, from between 100 employee to like 10,000 employees, that we see our target audience, our current customer base, is when you have a established product function in the company. You would have, one or two product managers or maybe more. You have your customer base that you need to take them on the journey for big initiatives, right? But I would say also like the decision to go with a beta program versus not a beta program depends also on the size of the initiative. If you have, changing the button from one place to another place, you don't need any of that. You just, do A/B tests and see what clicks and monitor behavior, changing colors and whatnot. These are small additions. Adding a graph here and a graph there, this is not a big deal. But if you have a big initiative, right, like you are extending your product offerings with a new different offering that can complement your existing product offering, that's a big initiative, right? You need to make sure that that investment that you're making is going to pay off with your existing customers and users. So that's why you need to have a voice of customer program during development, right? So you can bring your users and customers along with you as you develop and make sure that you're actually solving the pain point that they have, or maybe it's a new customer base, and you're actually building the experience that they would enjoy and they would pay for. Because that's at the end of the day, there's a return on that investment. And in current environment, for example, the ROI, like where you investment dollars as a business is very much top of mind, because you don't want to spend 3 to 6 months of your valuable time when your product team and your UX team and your developers team and your product marketing team to launch something that is not going to yield the results that you think it's going to yield. So I would say that's between 100 to 10,000 employee. You need to start to think about voice of customer at scale, and you need to start to bring them in a more structured way, and that's where Stomio is going to help you out.
Awesome. Ayham, it feels like I almost pulled the pitch out of you by one question. And it tells me you're very passionate about this. It really does. Speaking about that, how did you start your company? Because founders, SaaS Insiders that listen to us, they're either already started and having their way, growing to traction, or planning to get started. What was your process? Because since I think you've incorporated in mid-2021, can you share a little bit how the idea turned into an MVP, basically?
Oh, awesome. Yeah, happy to do so. So I came from my experience. So I was in product management in B2B companies for about 10 years before starting Stomio. And I built a lot of hardware, built a lot of software, built a lot of firmware, built a lot of everything but a platform, which is we're building now. And every time we do go through a development process, right, we had to go through a beta program, whether it's a 1-month program or 3-month or sometimes a year, depending on the complexity of the process of the product. And every time we get to that stage, I was just looking at all the chaos that's happening, and I'll say that there's got to be a better way to do it, right? So you end up here's what a life usually without Stomio had for the product team. Yeah, you would have a spreadsheet that basically organizes everything that you need about the beta program. Who are the customers that you targeted? Who actually accepted? Who signed up? And So you start manually doing tracking in a spreadsheet, right? And then you would have a mailer that you establish. Let's say you have Google Mail. You say, okay, you want to beta at whatever product.com for people to send you feedback, right? So that's a feedback mechanism. Then you need to send them some sort of instructions, right? To say okay, in order to test this product, you need to click here and sign up there. I want to feedback on this and that. So you send them, probably a PDF or another spreadsheet that they need to follow. And then in order to capture that feedback systematically, you send them a survey 2 weeks after the fact. And then, 90% of people didn't get the chance to test. So they will not respond to the survey. Then you send another wave of survey and another wave of survey. And then you have, so now you've got 5 different tools you're already playing with. And you try to get that feedback from a mailer or a Slack message or a Teams message or a WebEx message, or somebody talk to their customer support rep and they say, like, well, I've been testing this product. I want you to relay this feedback to the product team. Or they'll be meeting with their sales rep and say, well, I've been testing this product in beta. I want to relay this feedback to the product team. So you end up with a lot of inputs coming in from various ways and various forms and various channels that you're also trying to make sense of it, right? And then on the other hand, the product leadership team and the engineering leadership team is asking you as a product leader, right? How's the beta program going? And because of all this chaos, you say you have a lot of recency bias. So it's either, well, we found one real bug, nobody's talking to us, or people are just not, they say it's cool. But you really don't have the insight, you really don't have the data. That's kind of the problem where we got into it at my, first stint. It was like, there's got to be a better way. And we couldn't find a better solution. It's either, what's out there is too expensive or too archaic or too complex to use. So when I went to my time at Cisco Meraki, I still remember clearly at one juncture, we were about to launch a beta program and we had 8 people in one room for a full day. And all what we were doing is just processing output from Google Forms for people to sign up and put it into Salesforce in order to send orders to ship product to them, right? So I was sitting in that room, I was saying, this is a very expensive data entry exercise, right? And there's gotta be a better way. The company is losing so much money on this. The team is not enjoying their time. This is not what they should be doing. These are all product leads. They are in 6 figures, a really high 6 figures income, and they should be talking to their customers. They should be prioritizing roadmap. They should be talking to engineers. So they should not be data processing stuff, but stuff needs to get done, right? So we had to get it done. So that was kind of like, we have 2 trigger points, I would say big trigger points. One is the first time I encountered the problem firsthand. And the second is when I saw that problem at scale in a different organization. And then the third one, when we started thinking about it, is when we talked to really in my circle, friends, different organizations, and they almost all unanimously said, yep, we beta test, it sucks. It's just the nature of the beast. So then we started thinking about the MVP itself. So it's okay, we know there's a problem. We don't have a lot of data to support that problem at that point. But we said, okay, we know there's a problem. Let's think about the possible solution, right? So we started, my co-founder, Ibra, and I, as friends. And so we started thinking about the solution. So we started a document that was really the manifesto of the company. And we started charging each other on part-time and weekends for probably a couple of months. And then when we have some idea that's kind of was crystallized in our head, we invited our third co-founder, Simone, to join and help us build an MVP. So we spent 2 years, part-time and weekends, not a lot of time, honestly, because everyone was busy with their full-time job. But we spent about 2 years just building an MVP and getting it out there to super close friends to get feedback on that, right? So, and then when we put it out, so one of our friends put it in production and got us laundry list of feedback. So that's when we knew, okay, there's actual demand. We're going to solve a problem here. Let's think about raising around and go do it for real so we can validate even more.
So before you got your first round, if I got this correctly, how much time do you think you spent building your first version and getting some feedback from friends and family?
Say like 10% to 15% of 2-year timeline, right? So think about, it'd be 480 or 365, 700 days, 10% of that.
Okay. Okay. So a couple months is okay.
2 to 3 months, probably like in aggregate. So, but we weren't doing it full force because we were just doing it, 10 hours a week, I would say, collectively. Because it was, we had our own full-time jobs at that point, and really busy jobs, right? So we had to get going on that front. But yeah, we validated, I would say, the idea. We put some sort of an MVP out there before we raised any single dollar. And throughout those 2 years time frame, we tried to interview a lot of other folks, and we interviewed at that time about say 15 to 20, and they all validated the pain point. So the collection of the input that we got that, hey, there's a problem from different product teams, and also the ability to kind of early test that our ideas of the solution actually works. was the trigger point for us to say, like, yeah, let's go make it real and let's raise some funding. But the fundraising was super quick at that point. We closed our pre-seed round in less than a month.
That's an interesting point here. If you could pause here for a second just to elaborate a little bit, because founders sometimes are good at building MVP, but not really good, even like mentally prepared to go on a fundraise. Yeah. What do you think it takes for a successful pre-seed round? What do you need to have in terms of like product, mindset? Like, what are the components to make it like you did in under a month?
That's a great question. So I would say, like, I would classify our experience as an outlier, to be honest. Just not the normal. But if you think about pre-seed, that's the idea phase, right? And the range of approaching a pre-seed round starts from you just a PowerPoint company, I would say, or maybe like a paper company. Like you have an idea on a PowerPoint or a slide, Google slide or a paper, all the way to you have some paying customers, right? So this is kind of the range that we have. It depends on the vertical that you're in. If you're, AI versus fintech versus B2B SaaS, what we are in, or B2C or hardware or software. That's all of these verticals are very important in terms of expectation. So my experience has been in B2B SaaS. So if you think about that range, if you start from a PowerPoint company, you can definitely raise money, but most likely you'll get more interest in an accelerator, right? Like Techstars, YC, or any other 100 accelerators out there. They'll say, okay, you're still in the idea phase. You still need to build an MVP. You need to really move fast. If you're interested in this, happy to take you through that process for 2 to 3 months. Here's some money just to pay for 2 or 3 people for that period of time. And by the way, we're going to take 7% of equity at the end of it if you raise a round, right? Nothing wrong with that. I think there's value in that for sure. But if you go to spending more time and build the product and get some sort of validation, which we were, it's like in the middle of that range, you would be able to go to angels and pre-seed VCs and start actually pitching the company and pitching the ideas. Okay, this is not an idea, it's actually an MVP. We have something out there. This is what we did in order to validate. This is what we think we are going to do. And we're just asking for money now to pay for ourselves, hire a couple of people, whatever that is, to get to market and get to the next milestone, which is paying customers at a certain amount. Obviously, the best way is to go all the way to you have a couple of paying customers already, right? So that's a lot of validation that you've already done. That hey, you have the problem that is identified, a solution that is working, and you have a market that some people are willing to pay for. So I think that's going to be probably the kind of the high end of that range. And if you go with that high end, you'll be able to raise bigger round at the higher valuation. From an investor standpoint, it's all a risk assessment exercise at that point. Most likely, they will not invest in the product or the company or the market. Most likely, the pre-seed, the focus is, I would say, heavily weighted on the founding team themselves. So there's the concept of founder market fit before the product market fit, because they would know, every investor, they would know that, hey, you're still not at product market fit. It's too early. You have to iterate on the product and the market and your messaging and all that fun stuff. But at the end of the day, does this team actually function? Is this team well positioned to tackle this specific problem? What makes this team unique in order to invest and back this team so they can tackle this problem? So in our case, the combination of my experience in going into the problem, right? So I intimately know the problem in minute details. I can be a barometer or an advocate for the voice of customer. My co-founders have their experience in building large-scale B2B SaaS platforms that they can handle tens of millions of requests a day. So that combination of expertise was unique, but also the 2 years that we spent working together is a de-risk factor for the investors, right? So that because the number one failing aspect of pre-seed companies is founder conflict. So we demonstrated that we didn't actually have a conflict. We actually have a functioning team that we can work together for 2 years, and we are equally passionate about the project and going forward.
That is fascinating. So let me know if I heard this correctly. So having a great, let's say, product or some form of it when you are pitching for a raise is important, but not sufficient, because you also need to be a founder market fit, which is you being a person who is qualified, who is better than others at solving this particular problem in this market.
And that changes based also on your level of experience of the team. So if you are early in your career, which is nothing wrong, there's no age difference or limit to start a company. So if you're early in your career, like in your teens or 20s, right? So that's when it becomes more about the pedigree, unfortunately, than anything else from an investor standpoint. Like, did you go to this fancy school? Did you go to that other program? Because that's for the investor class. It's a filter. They say, okay, I'm going to back a team of young, inexperienced. They're going to make a lot of mistakes, but they at least, I have a filter on level of intellect that they can do, right? So it becomes heavy on the pedigree early in the career. But if you were in mid-career like we were, so now it's like mid-30s when I started the Stomio, it's all about the experience, like what kind of insights that you have through the career that well positions you to do that. It could be also, are you a serial entrepreneur? Have you had past experiences? So you've been through that process and how, the pain and what learnings that you can do. So it's all about the experience at that point in the 30s. But early career is about the pedigree, unfortunately, for a professional investor. That if one of the audience, if they are, like I'm from Syria, for example, I don't have the pedigree. If somebody from your audience is anywhere in the world and they're listening, don't feel discouraged. You only need one investor to say yes. So keep going at it. If you have people in your circle, if you know somebody who knows somebody who's into angel investing, you only need to convince one investor or, a syndicate or a group of investors to back you and go at it. But an accelerator route is very much viable for early career.
SaaS Insiders, I hope you're hearing this. You only need one investor, and that won't be the first one, probably. I heard a lot of people have different numbers, but a lot of times I hear some number around 100 investors or 100 pitches you need to make to make a round complete. How do you think that's accurate, like on average? I know you said your one is more of outlier, but from your perspective.
Yeah, I think it's accurate in terms of the level of effort that you need to put in. I think probably not the number itself is meaningless, I would say, but the notion is correct. Okay, you need to do a lot of outreach if you don't have a network, you don't have an inside route to any VC in order to bring people in. And then you need to fill the round with a number of smaller checks. Because even if you have a VC coming in, they are a pre-seed company, they might just write 50 to 75K check, right? And that's their sweet spot. So you keep going and keep going, keep adding until you close the round. In our case, we had, like I said, we're very outliers because I had a person in mind who's now our board member, and he's a close friend. I work with them in my career, and I know that he is doing some angel investing. So I kind of approach him that way. It's like, hey, this is what I'm working on. I'd love to get your feedback on it. So he was convinced, and he introduced me to his friend who does angel investing, and he turned out to be the lead investor. And when I closed the lead investor, they have between the two of them a group of 8 angels that they all invest together, and they say like consider the round closed if we're in, right? Because it's not a big number. We raised $1 million. I mean, it's a big number for pre-seed, but this for them it's kind of like their sweet spot. So that's kind of like how it worked out for us, and that's how we moved really, really fast in the process. It was the first group that we targeted. It turned out to be a slam dunk, and we closed the round immediately, and we've moved on to building the company. So that's kind of also another thing that for the target audience, it's not new knowledge here. I'd say that the goal that you need to think about when you fundraise is get the right investors on the board, close the round as quickly as possible, right? Because I see it as a distraction, because now we're going into a seed round. I see it as a distraction to fundraise. It's not the goal is to fundraise. The goal is to solve the actual pain that your customers have and grow the business and build the business. And the fundraising is an enabler for you as a team to go tackle that in full capacity. So we're very appreciative to our early investors that they enabled us to go and do this full time.
Some people even say fundraising can be a full-time job. If you need to raise like quickly enough, then there's so much focus you need to put into that. One thing you've mentioned, Ayham, is you basically went to your friend who's an angel and you asked for advice. And that's one thing I wanted to discuss with you, because I heard a really interesting approach to fundraising is approaching investors, especially the ones that you know, not with an intent of please invest in me, please, because it's, it's appearing as needy and you'll get defensive reaction from that. Instead, if you come from the position of, hey, give me feedback on this, if it sounds appealing, they'll say like, hey, can I invest? Or let me introduce you to someone. If it's not, they'll tell you what's wrong. And the thing I love about this is you can go back to them once you're done and kind of ask for advice again when it's like you have a second chance, basically. So what do you think about this? Yeah.
No, that's exactly what happened. So I went to my friend and told them, and by the way, it was not like we were not in touch for a long time. We're at that point having chatted in like a couple of years. And I texted him and said, okay, I'm working on something. Love to get your feedback on my pitch deck. It was just a practice run, and I was sincerely going at it as a practice run. So I gave a practice run. He listened to it, gave me feedback, and he said, fix this stuff, A, B, and C, and then once you're ready, let me know so I can introduce you to 2 other folks that you can practice with. So I did that, and he introduced me. But the trigger for me was he joined actually the second call, which he didn't declare or tell me that he was planning on doing so. So I saw that as a signal. Okay, he's looking, he's interested, he's checking if I could take input and update my pitch deck based on that input, which I did. So I did the second one with 2 people of his circle. They gave me a lot of great insight. And then I did another third one with other co-founders that I know, or other founders that I know in the network, and they gave me their insight. And at that point, I went back to him and told them, I had 3 rounds of reviews. I think I'm ready to actually go pitch. Are you interested or not? And then when he said, like, somewhat interested, but I want you to meet this person who is going to be, the lead. And if he's interested, I'm in. At that point, there's this history.
That is something that every founder should probably do. Not to go straight and ask for money, but more ask for feedback. Because if your pitch deck is good and if your offer is solid, you'll eventually get just more offers. Would that put you in kind of in a strong position of like, well, if you want to invest, we can of course negotiate how it's going to be structured. So that's
and fundraising is actually a kind of like a momentum sport, if you think about it. Like even if you pitch to somebody in your network and they say if you're raising $500,000 and you're able to close 100K from them, you can go to the next investor and now your pitch is different. At the end of the pitch, it's like, hey, we're raising for 500K. We already closed 100K, by the way. And so that they said, okay, well, I'm not the first check and somebody else believes in this team. Okay, let me write 50K or 25K. And then the next one is going to be easier. The next one's going to be easier. And guess what? When you get 400K, you're just looking to close that last 100K in the round. It becomes easier and easier. So I've seen actually some founders who use that momentum investing to change the valuation in each milestone. So let's say they want to raise, $1.5 million or $2 million, let's say, and then they close the first $1 million at one valuation, and then they go to the other 500K at the slightly higher valuation, so $1.5 million out of the 2, and then the last 500K they go slightly higher valuation. So you go 2 million, you close it at the higher valuation, but the average valuation that you have for the round is where they want it to be at the beginning. You end up with, you have to manage those different cap tables and different stuff. It's going to get messy, but they've used it as a mechanism basically to game the valuation game. Right? It's like, okay, early investors, you get in the lower valuation. Thank you. And then later investors, like, we're going to close the round. We know that. So it doesn't have to be that low valuation.
That's what I thought. It's kind of giving a good sign of appreciation to early investors, the early believers, right? Especially the ones who first put in their check, because it shows that you value, like they believe in you. What do you think will change for you going into seed round with all your experience of fundraising in your previous round? What do you think you will do differently this time?
Oh, well, the fundraising environment is massively different, right? So when we raised in 2021, there's the height of the fundraising hype, I would say. So money was abundant and was very easy. Stock market was ripping. So angels were happy with their portfolios. They were more loosey-goosey with their money overall. VCs, you had a lot of what they call tourist VCs, where they are late-stage investors or private equity funds or newly fund managers that they're going into the industry, and everybody's trying to outbid everybody. So I think today it's kind of the pendulum swinging the other way around, which is because of the public market, valuations went down so hard, so quick, right? So if you think about the average SaaS public valuation went down to 60, 70%. So all of late stage investing, which is Series B and above, I would say B, C, and D, all the letter of the alphabet, it's pretty much dried up. It's really, really hard to raise money now in late stage investing unless you have outstanding business and you're growing at outstanding clip. It's really hard to raise money. And then growth stage investing, which is like A and B, the expectation is getting more tough. So I don't have data, but I've heard from the grapevines is that, if you're A round, you need to be closer to 2 million ARR. It used to be 1 million. That's kind of like the permission to go to the A round, so to speak. But now it's getting harder to do so, and the valuations are going lower. So that trickled a little bit to seed and pre-seed, but not as much to late stage investing. So if you see the reporting from DocSend or from SVB, Silicon Valley Bank, the average valuation for a seed startup, let's say it went down about 20%, not 80%, right? But if you see the late stage went down 70, 80%, mid stage 40, 60%. So I would say the valuation expectation is difficult. Now it's much harder. The round size also is going down a little bit because people are now more diligent about deploying capital. They need to know that there is that capital being raised is going to be deployed for the next milestone, not for excessive spending on something that doesn't matter. And also the expectation in terms of traction. It depends also on your vertical, I would say. So for B2B SaaS, it depends, right, on the investor, but they need to have a product market for sure, and they need to have active users for sure, and they need to have some level of revenue for sure. It doesn't need to be really high, but it needs to be something. And that depends on the investor itself. Well, so we've been chatting with some investors. Some of them are still in seed round, looking at the team as number one, but I think less so. Some of them are really focused on MRR and ARR kind of metrics, which I think it's a bad way to look at the seed company because it's still pretty product market fit. But that's kind of the range, right? It's going to be some level of revenue to I've heard like 40,000 MRR, kind of like the range.
What do you think would be the tips for SaaS insiders who are listening and going into pre-seed round right now? If they have an idea, maybe have some sort of an MVP and they want to raise funds to go with their journey, what do you think will be the things that they need to keep in mind in the current market environment?
Pre-seed. So if you're raising pre-seed, I still go back to say focus on the founder market fit first. Say, why does this team matter? Why does this team need to be backed? Why does this team have unique insight to deliver, right? So that's kind of that would be number one. And number two, think about the market and the product, right? So it's less on the market, I would say, because even if you paint, $1 billion market or $1 trillion market, it's all speculation at this point. It's really, really, really early. Competition, if it's a big market, most likely there's competition, so you need to be aware of that. You can't be the only one in a very massive market that nobody has saw coming. So that's the odds of that happening is really slim, really slim. So if you think about it from an investor standpoint, in pre-seed, and you have 10 pitches and everyone's saying that we're going to be the world's first whatever AI thing that you're thinking about or crypto thing that you're thinking about, chances are you're not, right? Because they've seen all the pitches. So yeah, I would focus a lot on the team dynamics, product velocity, and learning velocity. Like how can you, what do you call, what kind of feedback loops you have between yourself as a team and your target audience, right? And how quickly can you learn? How quickly can you iterate? And that's something that you can demonstrate. That's great. So for us, for example, going from pre-seed to seed, we didn't have any good pre-seed. We can point to our website. We can show any investor that, hey, see our history from the moment we launch or actually soft launch until today. Every month, we're releasing features, improvements, fixing bugs. Every single month, there's a release that we have. Well, we actually release internally every 2 weeks, but every month there's something that we're announcing that is interesting, that is exciting, that's going to solve a pain point. It's a gap in the product that we had, and now we're improving on it. So that velocity is super important. Another trick I would say is, in order to help folks kind of alleviate the anxiety, which a trick I use a lot, is ask permission for people to record your interview, right? So if you're having an interview for the prospect, or you're having an interview for feedback, or you're having an interview for just sharing the ideas, ask permission from interviewee to record that session and store it. So we have now, tens of recordings, and we share it with our team, and we all learn from it. And that's available for us to share with any investor if they're interested, like what happened with this opportunity, why they are a fit. I don't see the use case. Well, here's the interview that we had with them. You can see clearly from their perspective, with their own words, that this is a problem that they have. This is what they do today. It's really not a great idea. And you can see their raw reaction to your idea live. So I think that's also another trick which you can have cheaply, just record that session.
That is brilliant. It's like proof of demand, and you get it for free by interviewing people on that and just validating kind of the idea, especially the pre-seed. That's brilliant. One thing that is really good insight is founder market fit, and you put a lot of emphasis for it for the pre-seed. A lot of times we find founders talking about the product, like even if they're not talking about features, if they're talking about the problem all the time, like it's already good. We're making progress here, right? We're not talking features, but you've mentioned that it's important, but not sufficient. But they also need to talk why they're qualified to make this happen. Because you might persuade investors that, yeah, this is a problem, but why you, right? Why we cannot just go and just choose someone else for that?
Yeah, like why would any other group of people coming to me with the same idea not succeed? Like why? What makes you unique? If you're going at it as an outsider to the problem, right? So that's, as I would say, like founder market fit at pre-seed and slightly at seed. Very important, then quickly moves to product market fit at seed and A. And then from that point on, is going to be channel market fit, right? So it's going to be like product channel market fit. Like how is the product mapping to the channel that reaches your audience to fuel the growth and acceleration of growth?
I admire how you grew as a founder in those like short 2 years with the company. Do you find some interesting books recently that elevated your understanding of how to run a business, how to lead a team, and any good reads on SaaS entrepreneurship, being a founder, that you could recommend to the audience?
Yeah, absolutely. So you got the classics, Lean Startup, 0 to 1. These are classic books that you need to read. I read all of them. I would say on top of that, Tony Fadell Build, which I have here on the list, is really good, really good read that you should do. And I would say that there's another book called Founder-Led Sales. I think that's also interesting read if you're in the B2B SaaS space. This is really good read. So these are kind of like the top 4 I would think about. You can learn a lot. You can learn a lot by reading. You can learn a lot by doing. You're going to do a lot of mistakes, obviously, but this is a big learning experience, I would say. So I'm very grateful.
Learning books is just half of the story. You need to also go and implement what you learned. That's what sometimes we forget. It's like we think if we learn 1 book a week, we're getting Jeff Bezos kind of level. Like we gotta implement.
I tell you, like it changed like the way I was reading entrepreneurship books before starting the company and after is different, right? Because the way before was just for entertainment/education. After is I'm reading to see how can I apply any of the insights or learnings to the business. Is this relevant for me or not? So that's kind of like the lens changes.
What I like to do when I read a book right now is I find 1 to 3 things that I can implement right now. And sometimes I can just stop there. Like sometimes I can be half through the book if I see 3 things I can do this week. Perfect. Why keep doing like reading through the book and having like 50 points that you won't implement in one chunk? Like if you can stop implementing then revisit, you can do that as well. So I think it's kind of it's shaping you. When you start getting into action, you realize you don't need to learn it from first till the last character. You just need to find some things you can do for yourself.
And you can skip chapters. Like I was reading early on the book called Traction, which just talks about all the different channels that you can actually find users. And some of them are just like, okay, I read the title, it's not going to apply to us, right? So, okay, going to having a booth in a trade show, we don't have the funding for it, we don't have the money, we're still early for that. We just can't skip it. I can go back and read it. Or go to billboard ads, right? The traditional advertising. We're not going to spend money on that. Let's skip that now. We can go do other things, right? So it changes your prioritization. It changes also your perspective on things, which is it's really fun.
I think I learned that lesson when I was reading Ray Dalio's Principles. I'm not
Yeah.
sure if you did, but that's a
Yeah,
pretty
I know that.
sizable book. And
Very
back then,
big.
I thought I need to learn from the beginning till the end, and only then I make a conclusion. And I downloaded an audiobook, and it's like 21 hours of audiobook. And it's like, if you listen for 3 hours straight, you'll be listening for a week just for that thing. That's like half a day. And
Yeah.
and I found that when I revisited that, I could just implement for the first couple hours. I already saw some things I can do because there's so
Yeah.
much in it, but I didn't know that, and that's
Pretty
what's
cool.
different right now. If you were to, let's say you could change something in the past for your company, that's the exercise that we do with founders, is like going back from your current experience. Let's say you can travel
Yeah.
back in time and give yourself like one piece of advice when you get started, when you're thinking about MVP. And
Yeah.
what are the things you would tell like 2-year younger self about your company and the way you should do it?
That's an interesting question. So when I was starting, so I was a PM for a long time, but I wasn't deep into UX. I read some UX stuff for fundraising, so it helped me understand the language when we hired actual UX professionals on our team, and helped me appreciate what they do. I would have probably spent an equal amount of time learning about growth and marketing, which I've been doing for the past probably 6 months. Because for somebody who's been at a product for a long time, marketing and sales has been usually handled for you. You're already in a safe environment. You're just worrying about prioritization and road mapping and addressing customer demand. But once you build something, you already have that infrastructure established for you, right? So you have the product marketing folks, you have the PR folks, you have the marketing operations, you have the salespeople. Everyone is just in sales mode, and you can start seeing that traction going together if you did your job right. So what I was taking that part for granted, which is a really important part of the business. I would have spent an equal amount of time understanding that world and start to think about how to get the word out sooner than we did. Because for us, we spent the first 6 months with a small group of target audience to refine the thinking, define what's important, what's not important, and then spent another 6 months in basically building in public, and then we launched after a year. So I would say if I would do it again, I would start marketing probably month 2 or 3, get the word out, build the momentum. Even if it's something that's not there yet, we can say it's coming soon, right? So that's going to be advertised. So always think about go-to-market, in my opinion, sooner than you think.
So the kind of, if to conclude that, it basically means put more thoughtful, like more effort into marketing and sales, and start doing that earlier than later.
Earlier than you're comfortable with.
I see. A lot of times when I'm working with SaaS founders and I help them build their product, their MVP, sometimes I even say, we can start marketing even before it's fully launched yet, even when we even have some kind of wireframes, designs, to get some traction. There's a lot of resistance, like, but what if they want to try it? There's waiting. It's uncomfortable because it's like, but what if it doesn't work, right? But what if it does work and there's crickets, right? What do we do with that? So it's
yeah, that's true. I mean, that's why like voice of customer is really, really important. So that's why, like I said, for early stage companies, getting the word out and getting a feedback loop with your target audience is critical. Even if it's a small subset of people, let's say 4 or 5 people, that's voice of customer. That's important, right? They will tell you something that is interesting. And I can tell you, I can share an idea. When we did like the first 6 months, we had, a monthly meeting with a very small group, 4 or 5 people, where they all come in and they will chime in. So when we did our wireframing, I just like, okay, this is what we're thinking about the sign-up process, and you go here. So I thought it's going to be like really easy. And they said, wait. We spent like the entire hour just thinking of and getting feedback on the sign-up process, which we thought when we were building it that it is like really simple 3 clicks. And we said, why 3 clicks? And why do you need this information? Why that information? This is friction. This doesn't make sense. So it's got a lot of insight, a lot of data that we had just from the sign-up process. Right. And then when we got to our actual product, we get equal amount of feedback. So the things that you think are natural and easy, when you start sharing with other people, you start seeing a lot of perspective. And because you are biased in your development process, you're falling in love with the product, you're falling in love with their idea or some design, and it makes sense to you because you're in it every day. But if someone just looks at it with fresh eyes, they would see it as a first time. It's like, whoa, What is this? What is that? Does it make sense? The language here, the language there, right? So that's all just gold feedback that you have to take.
That's pretty unanimous feedback that I hear, that a lot of times we get biased because we're so close to a product every day. We're so used to that. It feels so natural, and it feels intuitive to use, but not to the person who sees for the first time. So always need to keep the perspective.
Unless you are your own user, then it's not intuitive.
No, but still, if you're on a user, but you see it every day, you kind of know how it works. Ayham, if people want to connect with you, it can be fellow SaaS insiders who want to offer help, or maybe be your users, your testers. We get sometimes SaaS VCs also joining us today, not today, but in general. But you may be interested in joining you in your seed round. What is the best way to connect and have a conversation?
Anywhere. They can find me on LinkedIn. And pretty responsive usually. It's not spam. You can just email me, ayham@stomio.io. Very responsive to email. And if you want Twitter, also you can find me ayham222242.
Or what do you think would be the concluding thoughts? What would be the note you would want to conclude our conversation on?
I would say, so the conversation went through the fundraising round and some insights for different audience, for early stage, I would say founders. So focus on founder market fit. If you're raising pre-seed, somewhat if you're raising seed, really get that feedback loop with your early audience. When you're early, nothing beats talking to somebody on a phone or on a Zoom call. It's easier now than ever. Get out there and do it. And if you have some audience that's going to be in a trade show, just go to the trade show and talk to them face to face. They will give you some insights and they'll give you some feedback. So do the things that don't scale, I would say, which is like Paul Graham, famous quote, do the things that don't scale early on, because you're going to learn a ton. And then when you start to get traction, start to think about things that are systematic and that can scale, that can give you feedback at a more processed way and more organized way. Don't worry about scale early on. Worry about solving the pain, solving the problem, finding your audience and reaching out to them. And once you get to that scale and you want to systemize your voice of customer program, check us out. I'd love to talk.
Ayham Ereksousi, everyone. Ayham, I thank you so much for joining me in today's episode.
Oh, thank you, Vlad. Really appreciate it.
SaaS Insiders, we'll see you in the next ones.